Hello, it's Ms Legalista here, aka Attorney Sheila, back with a new, I guess she's not so new because it's been in the news for a couple of months now because she's being sued by JP Morgan Chase Bank, the Securities and Exchange Commission. And now the US government is going after her also. This is Charlie J, who, was trying to put together this whole startup, but it was all a big fraud.
Yeah.
We're going to start this by checking out who Charlie Javice is. On her LinkedIn page, she actually goes by Charlie J. I like that. Something a little different. Helps you stand out from everyone else. But her name was a little different anyway. So I think she was already going to stand out. But here we have another alleged fraudster, scammer, whatever you want to call her. The that bothers me the most about this one is that it had the potential of impacting college students who needed financial aid. Like, if you're going to scam someone, why go to people who are just starting out, just on this adult path, and fumble the ball for them? It just irks me just a bit. Let's head to LinkedIn so that we can check out a little bit of her background and you can come up to speed with who she was before we dive in to this complaint that the Securities and Exchange Commission filed against her. That's going to be the first one that I'm going to start with her in this series. So her name is Charlie Javice, Javice. That's how that's spelled. Well, you can see she's second in line on my LinkedIn, so not anyone that I know. She was CEO and founder at Frank. So Frank was what she created. We're going to talk a little bit more about that. But let's pull her up and see what she actually has on her LinkedIn account. She's out of New York. Let's see, direct to consumer financial services, growth, fintech, Gen Z marketing, going after people who just started, enterprise sales, go to market strategy, product development, team building, strategic partnerships. Then she's got some things up here. It's media information where there have been some features done. Let me click on that because there is one that I'm going to point out a little bit later. It's this one with the Pop Sugar News. We will have to click on that to sort of check that one out. Let's go to this article here. How a 25-year-old woman is rebuilding the college aid process one student at a time. She was 25 years old, created this form that streamlines and simplifies FAFSA, bringing the process down to only a few minutes. And according to the company's statement, eliminating layers of bureaucracy, opportunity for mistakes, and hours of headache and heartache. For those of you who don't know, FAFSA is, it is the free application for federal student aid. People who are not typically in need of financial assistance might not be familiar with that, but FAFSA's been around for a long time. I used FAFSA. My daughter, we are still using FAFSA for her because she is still in college. So you can go and check that one out, what that article says about her. But let me click back over here to talk a little bit about her background before we talk about the actual fraud that went on. So she's got about 1,700 followers, and here's a Frank aid page. I tried to open that up. I think that's down. I couldn't. Yeah. Well, this is the linked page, but yeah, let's go back here. All right, let's down here and see what else we have on this page about her. Her experience, managing director, head of student solutions, JP Morgan Chase. This is after she sold Frank, the company that she created, that she's CEO of. This is after she Frank to JP Morgan. They essentially created some space for her there. All right, founder and CEO of Frank. This was actually started in 2016. As I told you out of that Pop Sugar article, she was only 25 years old. It says, let's exactly what Frank is so we can know what we're talking about when we go look at this complaint that's been filed against her. Frank is the leading platform connecting students to financial colleges they'll love. We help students apply for FAFSA in under 5 minutes, match students with scholarships, and provide emergency aid all in one place. You guys love this. I mean, the idea, had this really and truly been a thing that worked, this saved students so much time. I don't know when was the last time you did a FAFSA. I literally did, I think last month, helping out my daughter with hers. It's a chore. It is a huge chore. You got to have all your together. They're asking, well, how much is your house worth? And it's a lot. It's a lot of work. You're trying to put that together. Your school generally requires it. Then you're out there searching for scholarships. All of this is a lot of work to get a college education that now some people are starting to ask, do we even need all of this education? If you've done the let me know. Let me know what your experiences have been with FAFSA and whether or not something like Frank sounds like it would have been a help to 5 minutes or less, 5 minutes or less. At least that's what she says. So I would have loved to see how somebody like JP Morgan would say, oh, yes, we're interested in getting these students early, grabbing them, having them become potential customers early on. Because think about it, with banking, a lot of times once you become a customer, you generally stay with that bank. Yeah, I would tell you about my own experience. One of mine, I've been there since I was 21 years old. So I have an account that's like 30 years old. I have an account that's older than my daughter. Yes, that is what it looks like. Let's go back and finish looking at her LinkedIn page before we head over to this SEC complaint. The Wharton, okay, the Wharton School, very well-known business school, venture incubation program, member, first semester freshman admitted, now alum of the Wharton's Entrepreneur Venture Initiation Program, and she won some sort of award there. Special advisor to Wharton Social Impact Programs. So, talk about what this really is about here when we are dropping the names of the schools here. This is about giving credibility to who you are, because we know that there are plenty of people out there, when you drop circles, you automatically, I don't want to say get a pass, but people are less likely to think that you're up to no good. When really the reality is, it doesn't matter where you are. People who are up to no good can be in any setting, in any environment, at any school. There's some cachet with schools. Let's not act like there's not. Otherwise, a whole US news ranking system that a lot of schools are now saying, you know what, we're not going to be a part of that anymore. But let's just understand and not act like that's not a thing, because it is. And so you put these things on your resume so that you can stand out and be like, look at this shiny school that I went to. So we're holding all of these so that we can stand out, we can build our reputation, we can give ourselves credibility. We're on LinkedIn. This is where we're sharing all of this. We know how this system works and why this information is there. We share it because we're trying to build a professional on resume. This is what this is. And then we use this professional online resume to connect with other people, to find opportunities, hopefully to start to build a professional career. So this is not a bad thing. This is a good thing. All right, let's scroll down. So now we've got founder of something else. I'm not sure what this is. Power Up. It says Power Up students, scholars, and professionals to learn, connect, invest in sustainable solutions to end poverty with the click of a mouse. I'm not even going to go, you know, yeah. Member of the board of overseers at something, not sure what that was. And we've got an intern at Planet Finance Argentina. So, she was just starting to build her professional career like a lot of young people are. And I give people props for getting on LinkedIn and doing what they need to do. She was doing all the right things. She had her experience listed up there, she had features listed up there. Really good. Sometimes people miss out on all of the extra things that you can do to build your online professional resume. This is what this is. Looking for a job, looking for opportunities, this is what you should be doing. Okay, so now we have a little bit of background about her. Now I want to go to this SEC document that tells us all of the things that, yeah, she probably shouldn't have been doing. And you guys, this one, I'm telling you, I was amazed. Even though I've done a few of these where I'm looking at some of the scams and frauds that people have put in place, I still get amazed at the extent to which people will go through hoops to get money and to scam people. It is amazing to me sometimes. All right, let's go to this SEC page. Let me make sure you can see everything good here, nice and big. All right. United States District Court, Southern District of New York, Securities and Exchange Commission, Charlie Javice, and her in her role as trustee. This is a complaint and jury demand. Plaintiff Securities and Exchange Commission for its complaint against defendant Charlie Javice and Javice in her role as trustee for this trust. Here are the allegations, and I'm just going to go through the summary and the violations in this. And then as we move forward in the video, I'm going to talk a little bit more about even more of the details. All right, summary. In the summer of 2021, Javice sold the company founded Frank. Remember, this is this platform where you can go through the FAFSA in under 5 minutes for $175 million to JP Morgan Chase. Okay, that is a lot of money, $175 million. And as a matter of fact, let me tell you, I had actually done this video yesterday, but something happened with the microphone and I had to redo it. And so when I did, I was talking about some of the other scammers and I was bringing up the millions of dollars that supposedly they had I guess finagled out of people or caused in losses. I can't find it now, but maybe I'll find it and I don't know, do another laying it out there for everybody. But $175 million is a lot of money. Through the deal, JP Morgan was eager to acquire the identity information of the 4.25 million customers, purportedly students looking to finance their educations, that Javice repeatedly claimed Frank had collected. And I just, here's the thing, I really want to point out this piece here because part of this is you have this person coming, supposedly went to a good school, so maybe she's a good person, maybe she has a good background. Those are all maybes, you don't really know. And JP Morgan is looking for growth. It's looking for profit. Let's not forget that. It is a business. Its primary goal is to make money for its shareholders. How do you do that? Well, you bring in new customers or you charge more. Those are the ways that you increase value. Some of the ways anyway. So 4.25 million customers. And what did I just say? How long do you stick with a bank? I'm telling you, my first week, I have been with it for over 30 years. Okay, 30 years. So yes, you know that they wanted the 4.25 million customers who you already know are going to be interested in opening bank accounts, building a credit history. They're going to want these services. So yeah, for JP Morgan Chase, this was like, yes, this is a win for us if we can get it. JP Morgan had been seeking to expand its market share for financial services and the largely untapped student segment of the population and hope to use Frank's customer information to target those products. See, what did I tell you? But as Javice knew, Frank did not have 4.25 million student customers or their identifying information. Javice, Frank's CEO, understood that Frank's customer data was the asset that JP Morgan wanted and that JP Morgan would pursue an acquisition if it knew the truth. That Frank, in fact, had identifying data for only 300,000 students. Imagine that. You guys do the math on that. Okay. So they were almost a million short. Okay. I mean, almost 4 million short. That's a lot. That is a lot. Therefore, in order to ensure that JP Morgan Chase went forward with the transaction, Javice embarked on a fraudulent scheme to one, hide the fact that Frank had identifying data about 300,000 students, and two, fabricate data to falsely support Javis's claims. Okay, one thing to hide. It's one thing to say, okay, well, let's not put that out there. Let's hide the numbers. It's another thing to go through a whole bunch of hoops to fabricate. We're going to learn how they put together this fabrication. Prior to the acquisition, which was documented as a merger, Javice repeatedly touted that Frank had 4.25 million customers and explained in one-on-one meetings with JP Morgan employees that those 4.25 million customers were students who had provided, listen to this, had provided a first name, last name, email address, and everything JP Morgan would need. When JP Morgan asked to review the customer data, Javice paid a university professor to create fake data appearing to represent 4.25 million customers. Javice then provided that list of 4.25 million data entries to a third-party validator who in turn reported it to JP Morgan Chase. Now, think about that. So that's what I mean when I said it, it takes a bit of effort to say we're going to hide the fact that we don't have these 4.25, like that's one issue already. But to then go out and hire someone to say, here's what I need you to do. I need 4.25 million customers. I need their first name, email address, and phone number. So we're just going to pull all of that together. And that's what they did. You're taking it to a whole nother level when you get to that point. All right, let's go back and scroll down further. No, JP Morgan Chase would have access to Frank's real and much more limited student data after the close of the acquisition. Another high-ranking Frank executive, we're going to call that person the Frank executive, began an effort to create a list of real names they could pass off as Frank's customers. To that end, the Frank executive arranged for Frank to pay $100,000 to a third-party data compiler for its in-college student data. Javice for Frank to pay $75,000 to a different data compiler to augment the list the Frank executive bought with email and phone data. So I guess one of the things I'm sort of thinking here is, why didn't you just do that in the very beginning and just try to grow based on what you had purchased from these compilers and then tweak your list, continue to list, get ambassadors on campus to, teach people about using Frank and just really work. And then once you get to the point where you have the actual customers, then you start to seek someone to sell the business to. But no, I think people are very much driven by trying to look like they're successful in the technology startup world, in the fintech world. They want to come across as fintech entrepreneurs, fintech space. I am a woman in the fintech space because this traditionally in a space that has been predominated by men. So there can be a lot of pressure on someone who is to build a company in this space to show success. And I could go back to that LinkedIn page and show some of the articles from companies like TechCrunch talking about how much money is being poured into Frank because they see it as great opportunity, and it is. If you think about all of the number of students from a business perspective, if you think of the number of students who need help, financial aid, going to school, if you can provide something for them to assist, then yes, it's a good thing. But the way that you go about it can't be, I'm just going to lie to you and make up people and then go pay somebody. We're going to make up some more people. Let me just go buy some lists from some other people. That's not the way you do it. So there were so many problems with this. So now they've paid a professor, they've paid third party compilers to put all of this information together. And I think what they were hoping was if we can get some legit names and confirmation together before JP Morgan figures this out, then we're in the clear. I think that's what they were thinking. But see, that didn't work because let's figure out why. After the merger, when JP Morgan used those sham lists to test a marketing campaign for its financial services to a sample of what thought were Frank's customers, its campaign reached few of the intended recipients. And its marketing email was open fraction of those that it did reach. JP Morgan then conducted an internal investigation through which Frank had no list of 4.25 million legitimate users and that Javice had engaged in a months-long scheme to fabricate the data that she knew JP Morgan Chase was paying 175 million to acquire. You guys, so then you have the violations that she's being charged with under the Securities Act of 1903, 1934, and Rule 10B. And yes, and then you have the nature of meetings. So I'm going to go over the rest of this in another video. I wanted to give the background here, but you guys, this is just so go through all of this, who she hired. We're going to talk about the defendants. We're going to talk about other people who were involved with this, namely an engineer that she tried to get. And the engineer was just like, I don't want to go to jail. I don't want to put on an orange suit. Keep me out of this. I don't want to do this. I don't want to be a part of this. Very similar to Elizabeth Holmes. Now, here's the other thing that I want to bring up. Elizabeth Holmes, Sam Bankman-Fried, Martin Shkreli, or however you say his name, all of these people were on the Forbes 30 under 30 list. We're going to go to this Guardian article because I want to talk to you about what they had to say about this Forbes 30 under 30 and number of people who were sort of looking at, I guess, prison. I'm going to bring it up. It's going to take me a second because I didn't do a good job of bringing it up. This article just came out 5 days. Remember, I said I did this video yesterday and the mic messed up. So now I'm back here doing it again. Well, video actually started with the Guardian article. So this time I've got it reversed. I introduced her and I'm going to go to this Guardian article because I do want you to see it so we can talk about it, because again, it's sort of information about where does the pressure come to do these sorts of things where you're scamming all of these people and the amount of money involved. The potential harm that you're doing to so many people is beyond what most of us ever think about. We're thinking small scams. These people are out here thinking about scams in the millions. Let's go over this article from The Guardian. 30 under 30-year sentences why so many of Forbes' young heroes face jail. Arwa Madawi here. Ex-CEO Charlie Javice, 31, is just the magazine's list to see criminal charges. So it says here, just a few years ago, Charlie Javice was riding high. In 2019, the tech CEO landed a spot on 30 under 30 list for her work on a startup called Frank, which she described as Amazon for higher education. Okay, stop right there because there is this need to sort of say, when they're selling to venture capitalists, when they're selling the idea, when they're selling the platform, the image of what this could be, it's easy to then throw out, this is the Amazon of, this is the Twitter of. You use something that people already see successful, and you attach your project to that to make it sound like, okay, I'll see the potential of what this could be. Because that's really what you're selling, what this could be. That's what JP Morgan thought it was buying, 4.25 of what it could be. But that's not what it was, because she didn't have 4.25 million customers. This idea that I'm going to build the next Amazon of something without keeping in mind how many years it took Amazon to get where it is. Remember, think back. There were years when Amazon was in the red. Investors were like, when are you going to start making money? You just keep expanding, you just keep growing. You started with books. I don't know how many of you remember this. Amazon started with books, and then they kept growing, they kept expanding, operating in the red year after year, quarter after quarter, year after year. And people forget that it took a long time for Amazon to do what it did. Now, I'm not making a case that Amazon is some great company. I'm trying to get you to understand that there is sort of this perspective out here now that you've got to be able to move a lot faster. You've got to be able to show big things quicker. Investors are looking. You don't want to fail. Now, I don't know if she was feeling this way, but sometimes being young and being a woman, you're worried if how people are going to look at you if you fail. This is fintech. This is fintech. And so in the fintech world, there aren't as many women leaders. You want to be who's successful. You want to stand out. You've already been in, so now you're in Pop Sugar, you're Forbes 30 under. So yeah, there can be a lot of pressure. And so this article, where she's saying, oh, we're going to be the Amazon of this, already you can see that she's trying to label her company in a way to set expectations without saying, you know what, we're just out. It is going to take us at least a decade for us to build this. What happened to the humility behind slowly and just putting in the work? When do we talk about just having to put in the work year after year after year and start to really build a base of something that has value instead of trying to take the easy way, the cheap way out? I feel like is happening sometimes now. So it says here the entrepreneur shared the news online about JP Morgan Chase acquiring the company for 175 million in 2021, saying both that it just 4 years Frank had grown to serve over 5 million students. Look, this is in quotations here. What happened to the 4.25? So we're not even at 5 in this article. It's 5 million. It's 5 million. I just, okay, so that's let me stop here. Okay. Because that's the real lawyer reaction right there when I'm looking at this, and it's no longer 4.25. Like it's not just good enough for me to lie about 4.25. I'm now just gonna lie about 5 million. Let's, if we're gonna lie, just go big with the lie. I don't understand. I really truly don't. I'm hurt. On this one, I'm hurt. I really am. Turns out those numbers might have been just a teeny bit exaggerated. So they are being totally sarcastic in this. And I think that's why they threw that 5 million over there at over 6,000 colleges. I just, JP Morgan did not do its work here. But so let me really talk about where this article is going though. Okay. So it's giving some background on Charlie Javice. Okay. It starts to mention some of Forbes' previous notables that it held up. In 2021, Sam Bankman-Fried, a self-described effective altruist, meaning he makes money to give it away, He's now facing of charges ranging from bribing a foreign. Oh, okay. Sorry. That totally, my finger hit somewhere. All right. Let's see if I can get back to where it was. Okay. Sorry about that. Make sure we're all good. Okay. Sam Bankman Fried. Okay. Charges ranging from being a foreign government to money laundering to making unlawful political contributions. Yeah. So he was on that list. Martin Farmer Bro, remember him when he took the pills and wanted, I can't even remember how much it was. It was something ridiculous and just inhumane was what he did. He was sentenced in prison in 2018 for securities fraud. He was an alum of the Forbes list. It says Elizabeth Holmes never quite made it to the 30 under 30 list, but she did headline the Forbes under 30. So they gave her an honorary mention here. Then they have Trevor Milton. He was convicted of fraud. Yeah. So you had this person who made a comment. The Forbes 30 under 30 have also been arrested for frauds and scams worth over $8.5 billion. $18.5 billion. That's a lot of money when you take that account. But the thing about it is, Forbes is looking at fintech and investing and money. So we would expect those numbers high. But that's it. That gives you the background. That gives you what's going on with the SEC. Now, remember, this is just Securities and Exchange Commission violation. You still have the lawsuit, which is a civil lawsuit that JP Morgan Chase filed. This is basically probably going to be for fraud. I haven't said it yet, but it's probably going to be for fraud. You fraudulently use those names, came up with that when you knew you didn't have it in order to get $175 million from us. So you have that. Then you also have the Justice Department, who's going to be going after her probably for something very similar, fraud, but on the criminal side. So she may be looking at jail time. I say any of this with any delight. Like, I totally hate that people are in this position. I hate to see people in this position. Like, I don't want to see people here. And yet here we are. So I hope this gives you some background information on Charlie Javice. Continue to go forward with this. I'm going to be doing a little bit more on some of the scams, frauds. I don't know what we're going to call them. I'm going to have the name for them. But yes, and have a totally separate playlist for all of these. But if that brings you up to speed, give the video a thumbs up and don't forget to subscribe. Peace.